All right, ready to dive in. Today, we're looking at something a little different. The 2023 annual report from China Mengniu Dairy Company Limited.
Yeah, this is one of the biggest dairy companies in the world.
I was surprised to learn they're number 8 on Rebel Bank's Global Dairy Top 20 list.
Pretty impressive, right?
Definitely, and they're not just some little niche company.
No, they're producing a whole range of dairy products.
Like what?
Well, you've got your classic liquid milk, ice cream.
The staples.
Then they also do milk formula and even cheese.
Wow, the whole gamut.
It seems so.
Plus, I saw they have a pretty good reputation for sustainability.
Yeah, they got an AA rating from MSCI for their ESG practices.
Which basically means they're leading the pack in China when it comes to sustainable dairy production.
Exactly.
So should we jump into the report then?
Let's do it, see what we can uncover.
Okay, so first off, let's break down their business segments.
Sounds good.
Their bread and butter seems to be liquid milk.
Absolutely, that's their core business.
The report says that segment brought in a massive 83.2% of their total revenue in 2023.
Which makes sense when you consider the growing demand for dairy in China.
Right, and they're tapping into some interesting consumer trends within that segment.
Oh, yeah. Like what?
Well, they're really leaning into the health-conscious market.
Makes sense. People are becoming more aware of what they're consuming.
So Menu's offering things like organic milk and low-sugar, low-fat options.
Smart move.
And get this, they're sourcing milk from the desert for their reborn Jingzi infant formula.
Wow, from the desert.
Yep, they're going all in on premium natural ingredients.
Talk about dedication.
Then there's their Yofine Diary yogurt brand. Have you seen the flavors they have?
I can't say I have.
Oh man, they're wild. Osmanthus and water chestnut yogurt, forest avocado yogurt.
Those are some unique combinations.
Right. Super adventurous.
Shows they're not afraid to experiment and try new things.
Definitely. They're diversifying within their liquid milk segment, offering unique products that target different consumer needs and preferences.
It's a good strategy, especially with how competitive the Chinese market is.
Totally. But what about their other segments, like ice cream, milk formula, and cheese?
How are those stacking up against liquid milk?
Well, the report doesn't give specific revenue figures for each one.
Oh, okay.
But they do highlight some of the initiatives and challenges they're facing.
Interesting.
For instance, their infant formula business had to deal with stricter national standards in 2023.
Makes sense. Quality control is paramount when it comes to baby food.
Absolutely. So they had to really step up their game.
And did they manage?
They did. They refined their reborn product line to meet those new standards.
That's good to hear.
And they even introduced a world-first feature in their NG formula called MLCT structured lipids.
What are those exactly?
It's a type of fat that's easier for babies to digest and absorb.
So they're really pushing the boundaries in infant nutrition.
It seems so.
Impressive.
Now, what about cheese? That's a relatively new area for them.
Right, it's not a traditional part of the Chinese diet.
But it's a growing market.
And Mengniu is investing strategically. They're building production facilities and expanding their cheese portfolio.
It's a bet on changing consumer tastes and the growing popularity of Western cuisine.
A calculated risk, but it could pay off big time.
Okay, so they're firing on all cylinders with their business segments. But what about the nitty-gritty financials?
Let's take a look.
What are some of the key highlights from the report?
Well, first off, their gross profit saw a healthy jump.
How much of a jump are we talking?
It went up to RMB 36,640.1 million in 2023. That's up from RMB 32,689.8 million the year before.
That's a significant increase.
And their gross profit margin also went up by 1.9 percentage points to 37.2%.
Meaning they're keeping a larger chunk of their revenue after deducting costs.
Exactly.
So what's driving this positive performance?
A couple things. Firstly, a decrease in raw milk prices gave them some breathing room.
Okay, so lower input costs.
And secondly, they've shifted their product mix towards higher value offerings.
Makes sense. Premium products, premium profit.
Exactly.
But didn't they also ramp up their spending on selling and distribution?
They did. Their selling and distribution expenses went up by 12.7%, reaching RMB 25,192.2 million.
Wow, that's a big increase.
It's mainly due to their expansion of sales channels and marketing campaigns. They're trying to capture that post-pandemic resurgence of outdoor consumption.
So investing in growth.
Exactly.
But how did all this spending affect their overall profit?
Well, despite those higher operating expenses, their operating profits still increased year on year.
That's good news.
However, their profit attributable to owners of the company decreased by 9.3% to RMB 4,809.2 million.
So a bit of a mixed bag then.
It seems so.
What factors contributed to that dip in profit?
A few things. First, as we mentioned, those increased operating expenses.
Right.
Then there was a decrease in their net finance income. That's the money they make from investments and interest.
Got it.
And lastly, their income tax expense went up.
So a combination of factors at play.
Exactly.
Okay, let's dig a little deeper into their income statement. Did they mention anything about their revenue breakdown beyond that 83.2% from liquid milk?
Unfortunately, they didn't give a detailed breakdown for ice cream, milk formula, and cheese.
Oh, okay.
But they did stress that those segments are key growth areas for the future.
So they're clearly banking on those categories to drive future revenue.
It seems so.
Now let's move on to their balance sheet. What's their overall financial health looking like?
Well, their net debt stood at RMB 24,967 million at the end of 2023.
And how does that compare to the previous year?
It's actually down from RMB 26,342.8 million in 2022.
So they're managing their debt effectively.
It seems that way. Their total equity also increased slightly to RMB 50,651.7 million.
Which shows they have a solid equity base.
Yes.
Now let's talk cash flow. Any
Yeah.
insights there?
Well, their capital expenditure decreased by 17.8% year-on-year to RMB 4,171.8 million.
So they're being more cautious with their capital investments.
Yes, particularly with spending on new production facilities and modifications to existing ones.
Which makes sense considering the current economic climate.
Right, they're prioritizing operational efficiency over aggressive expansion.
And what about their free cash flow?
The report doesn't explicitly state the figure,
No, okay.
but we can see from their cash flow statement that they generated positive cash flows from operations.
Which is a good sign.
Absolutely, it means they're making more money from their core business activities than they're spending.
Right. And I also noticed they used a significant portion of their cash flow for financing activities.
Yes, primarily for dividend payments and share repurchases.
Okay, speaking of which, let's move on to shareholder value creation. What are they doing to reward their investors? What kind of numbers are we talking about?
Well, they declared and paid equity dividends totaling RMB 1,588,015,000 during 2023.
Okay, that's a decent payout.
And they've also proposed a final dividend of RMB 0.489 per ordinary share for the year, subject to shareholder approval, of course.
So they're definitely sharing their success with investors. And what about share buybacks? Are they engaging in those as well?
Yes, their cash flow statement shows a significant outflow for share repurchases.
So it seems they're actively using this strategy to return value to shareholders and boost their earnings per share.
Exactly. By buying back shares, they're reducing the number of shares outstanding, which increases the earnings per share for the remaining shareholders.
So Mengniu's taking concrete steps to reward its investors through both dividends and share buybacks.
It seems so. They're putting their money where their mouth is.
Okay, so we've looked at their business segments, their financials, and their approach to shareholder value. What's your overall assessment of the business moving forward?
Well, they're clearly operating in a dynamic and ever-changing market.
That's for sure.
But they're showing adaptability and a commitment to innovation, especially with their focus on premium products and their investments in key growth areas like milk formula and cheese.
Right, they're not standing still.
And financially, they seem to be on solid ground. Strong balance sheet, positive cash flow from operations.
So far, so good.
But there is one thing that sticks out to me.
What's that?
It's their heavy reliance on that liquid milk segment. It makes up the lion's share of their revenue.
Yeah, that's true.
What if consumer preferences shift dramatically away from traditional dairy products?
That's a good question.
How will they adapt?
That's definitely something to think about.
Definitely food for thought.
Okay, well, we'll have to dig into that more in the next part of our deep dive.
Let's do it. Yeah, that is a big question mark for sure. What happens if that huge reliance on liquid milk backfires?
It's a bit of a gamble, isn't it? So how can they reduce their dependence on liquid milk sales?
Well, it looks like they're trying to expand into milk formula and cheese.
Makes sense. Those markets are growing fast in China.
Exactly, and Mengniu is in a good position to capitalize on that growth.
But isn't the milk formula market already super competitive? They're going up against global giants with tons of money and big-name brands.
That's true. But Mengniu does have a couple of things working in its favor.
Oh, like what?
Well, first off, they've got a really strong brand reputation in China.
Yeah, they've been around for a while and people trust their products.
Right, and second, they're really good at what they do. They're using that dairy expertise to make high-quality formula that meets specific consumer needs.
You mentioned that NG formula with the MLCT structured lipids earlier.
Oh yeah, that's a prime example.
For those of us who don't speak baby formula, can you break that down? What makes it so special?
Sure thing. So MLCT structured lipids are basically a special kind of fat that's designed to be a lot like the fat in breast milk.
Interesting.
This means it's much easier for babies to digest and absorb, so they get more nutrients and are less likely to have tummy troubles.
So it's not just a marketing gimmick. It actually has real benefits.
Exactly. It's backed by science.
And then there's their Jingxi formula, made with organic milk from the desert.
Right. That's another way they're appealing to consumers.
It ticks all the boxes. Premium, natural, sustainable.
They're definitely on top of the trends.
So they're not just a dairy company, they're creating a whole dairy ecosystem.
I like that dairy ecosystem.
From basic milk to fancy formulas and even gourmet cheese.
It's like a one-stop shop for all your dairy needs.
Exactly.
They're building a whole platform that can cater to all sorts of consumers.
From budget shoppers to those looking for something really special.
And that brings us to their overall approach to business.
How do they operate? What's their philosophy?
Well, the report really emphasizes their commitment to corporate governance and sustainability.
Which is more important than ever these days.
Absolutely. Consumers want to know the companies they support are doing things the right way.
So are they walking the walk or just talking the talk?
It seems like they're actually taking action. They even have a sustainability committee.
Dedicated to overseeing those efforts.
Exactly. They're taking a holistic approach and considering the impact of their business on the environment and society.
You know, it's not just about profits anymore.
Right. Companies need to be responsible and ethical,
And they're aiming to be a leader in sustainable dairy production.
working towards a carbon-neutral dairy chain.
And they're even collaborating with their ranch suppliers to improve things like energy conservation and animal welfare.
It's great to see them thinking about the whole supply chain.
It shows a real commitment to making a difference.
And they've been recognized for their efforts. They got that AA rating from MSCI for their ESG practices.
So they're not just doing this for good PR, they're actually making an impact.
Exactly. It's a big boost to their brand image.
Okay, so they've got strong financials, innovative products, and they're committed to sustainability. What's next for Mengniu? What challenges and opportunities are on the horizon?
Well, one big challenge is the unpredictable nature of raw milk prices.
Right, dairy is a commodity, so those prices can fluctuate a lot.
Exactly. Things like weather, feed costs, and global demand can all play a role.
And that can really impact Mengniu's profits,
Mm.
especially since liquid milk is still such a big part of their business.
Absolutely.
We've seen how global events like the pandemic and the war in Ukraine have messed with supply chains and driven prices up.
Yeah, it's been a wild ride.
So how can Mengniu deal with these volatile prices? Do they have any strategies to hedge against that risk?
The report doesn't get into the specifics of their hedging practices,
Oh, okay.
but it does say they're working closely with their ranch suppliers to ensure a stable and sustainable milk supply.
So building strong relationships with suppliers is key.
It is, and they might even consider investing in their own dairy farms to gain more control over the supply chain.
That's vertical integration, right?
Exactly. That would give them more stability and help them predict costs better.
So managing those raw milk prices is something to keep an eye on.
Definitely. Now, in terms of opportunities, I think the milk formula and cheese markets in China have huge potential.
Compared to other developed countries, those markets are still pretty young.
Right. There's a lot of room for growth.
Like a field waiting to be planted.
Exactly. And Mengniu is already making moves in those segments. They're releasing those innovative formula products and focusing on premium cheese varieties.
And with rising incomes in China, there's a growing demand for high-quality dairy products.
They're in the right place at the right time.
But they're not just focused on China, are they? They've got global ambitions, too.
Oh, yeah. They want to be a major player on the world stage.
They're not content with just dominating the Chinese market.
It seems so.
Remember their acquisition of Bellamy's?
The Australian Organic Infant Formula Company.
Yep, that was a big step towards expanding beyond China.
It gives them a foothold in a country known for high-quality dairy and strict food safety standards.
Exactly. It's a way to build trust in new markets.
And then there's their investment in AIC, the Southeast Asian ice cream brand.
So they're diversifying geographically and reducing their reliance on any one market.
It's a good way to hedge against risks and economic ups and downs.
They're expanding their product portfolio, their consumer base, and their geographical reach.
They've got a multi-pronged growth strategy.
It's like they're building a global dairy empire.
One acquisition and investment at a time.
But international expansion is never easy, is it?
No, it comes with its own set of challenges.
They need to deal with different regulations, different tastes, different cultures.
They can't just export their products and expect them to sell.
They need to understand each market, adapt to local preferences, build relationships with partners.
It's about cultural sensitivity and building trust.
And then there's the whole logistical challenge of operating across multiple time zones and cultures.
It's a lot to handle.
It sounds like they're approaching it cautiously, though.
Yeah, they're being strategic and doing their research before jumping in.
Their commitment to good corporate governance and transparency will be key as they expand.
Absolutely. That's how they'll build trust with consumers, investors, and regulators in those new markets.
Okay, so we've talked about their product strategy, their financials, their sustainability efforts, and their global ambitions.
It's been a pretty comprehensive look at Mengniu.
But there's one more thing I wanted to touch on. Their corporate governance structure.
Ah, yes, the behind-the-scenes stuff, but it's important.
It is. Who are the key players at Mengniu? How do they make decisions?
Well, the report gives us some insight into their governance framework.
Okay, like what?
They've got a board of directors, an audit committee, a nomination committee.
And a sustainability committee, right?
Exactly. Those committees are there to oversee operations and ensure accountability.
Checks and balances to keep things running smoothly.
Right. They make sure decisions are made in the best interest of the company and its stakeholders.
And the report highlights their commitment to transparency and shareholder rights.
They've got clear procedures for things like shareholder meetings and proposals.
They want to make sure shareholders feel heard.
Exactly. And that kind of transparency is essential for building trust with investors.
It's a sign of a well-managed and responsible company.
And they're not just resting on their laurels. They recently updated their articles of association to keep up with the latest corporate governance standards.
So they're staying ahead of the curve.
Absolutely. They're committed to continuous improvement.
Okay, so we've covered a ton of ground in this deep dive.
We've really dissected Mengniu's business, their strategy, and their outlook for the future.
And hopefully we've given our listeners a good understanding of this dynamic company.
But of course, there's always more to explore.
And we encourage our listeners to do just that. Dig deeper, research further, and form your own opinions about Mengniu.
And as you do, think about this.
Their policy on share buybacks.
What about it?
Well, they say they only engage in share repurchases when they believe their shares are undervalued.
So they're not just buying back shares for the sake of it. They're being strategic.
Exactly. They want to make sure it's a good use of capital and will actually benefit shareholders.
It's a sign of disciplined financial management.
And they've been pretty active in the share buyback market recently.
Meaning they think their shares are currently a good deal.
They're essentially betting on themselves, showing confidence in their future prospects.
It's a way to boost shareholder value and increase their ownership stake in the company.
So it's a win-win for Mengniu and its investors.
It seems so.
Okay, I think we've covered just about everything. From milk to management, from financials to sustainability, from China to the world.
We've gone from cow to consumer.
We've really gotten to know Mengniu inside and out.
But now it's time for our listeners to continue the deep dive.
Explore further, ask questions, and keep learning. Yeah, it's a tricky situation for sure.
Lots of moving parts.
The geopolitical landscape is always changing.
And concerns about food security and sustainability are only growing.
It all adds up to a pretty complex environment for a company like Mengniu, especially with their global ambitions.
Absolutely.
We've seen rising nationalism, trade wars, supply chain disruptions.
Gets enough to make your head spin.
And then you've got the growing demand for food.
Coupled with the environmental impact of food production.
It's a recipe for some serious challenges.
No doubt about it.
The report doesn't really delve into these specific issues, does it?
Not in detail, no.
But they do talk about their commitment to building a more responsible and international company.
Right. They seem to recognize the importance of these factors.
Like with their focus on ESG principles
Right.
and their efforts to create a carbon-neutral dairy chain.
Those are definitely steps in the right direction.
It shows they're thinking about sustainability.
And it's a smart move from a business perspective, too.
How so?
Well, more and more consumers are concerned about the environment.
They want to support companies that are doing their part.
Exactly. So Mengniu's sustainability initiatives could actually attract more customers.
It's a win-win, helping the planet and boosting their bottom line.
Precisely.
And their push to become more international also shows they understand the global landscape is changing.
By expanding overseas, they're diversifying their income streams and reducing their dependence on any one market.
Which is crucial in today's uncertain world.
Absolutely. Think about all the geopolitical uncertainties and trade tensions we've seen lately.
Things can change in an instant.
And with a global footprint, Mengniu is less vulnerable to those disruptions
They're spreading the risk.
and opening up new avenues for growth.
Their acquisitions of companies like Bellamy's, the Australian organic infant formula company,
And their investments in brands like AIC, the Southeast Asian ice cream company.
it's all part of that strategy.
They're gaining access to new markets and new types of consumers,
It's like they're piecing together a global dairy empire.
bit by bit.
But going international isn't easy.
No, it comes with its own set of hurdles
They need to deal with different regulations in each country.
and cater to different tastes and preferences.
They have to build relationships with local partners.
It's not as simple as just shipping their products overseas.
They need to really understand each market,
Adapt their approach.
be sensitive to cultural differences, and build trust with those new consumers.
It's a lot to think about.
And then there's the challenge of managing operations across different time zones and cultures.
Coordinating everything from production to marketing.
It's a complex undertaking.
But it seems like Mengniu is being strategic about it.
They're not just rushing in blindly.
They're making calculated moves, doing their research, and assessing the risks.
And their commitment to good corporate governance and transparency will be essential as they expand.
Absolutely. That will help them build trust with consumers, investors, and regulators in those new markets.
It's about walking the walk, not just talking the talk.
Right, showing that they're committed to responsible business practices.
So while the report doesn't give us all the answers,
It does give us some insight into how Mengniu is approaching these challenges and opportunities.
it's clear they're not just a dairy company anymore.
They're evolving and adapting to a rapidly changing world.
They're ambitious, strategic, and forward-thinking.
All essential qualities for success in today's global landscape.
Well, that brings us to the end of our deep dive into China Mengniu Dairy's 2023 annual report.
We've covered a lot of ground.
We've explored their business, their financials, their growth strategies, their commitment to sustainability.
We've really gotten to know Mengniu.
And hopefully our listeners have too.
We encourage you to continue exploring, keep learning about Mengniu, and form your own opinions.
Track their progress. See how they navigate the challenges and opportunities that lie ahead.
It's an exciting journey.
And we'll be here to guide you along the way with more deep dives in the future.
Until next time.
Keep those brains churning.